Welcome to the Unlocking Wealth podcast. Thanks for joining us. We will motivate and inspire you as we share strategies from successful and wealthy individuals. Here is your host, David Ordonez, an entrepreneur and real estate investor.
Welcome to a new episode of the Unlocking Wealth podcast. As a real estate investor, it is very important that you choose the right partners, and it's essential to your success to select a good lender. We have trusted InstaLend for our lending needs, and they have become our preferred lender for our real estate investments.
InstaLend is your private lending partner, where you can get a loan commitment the same day and close within days. Grow your real estate portfolio with InstaLend. Tell us about your project. We lend on all product types, from short-term, fix and flip, and 30-year rental loans across single and multifamily properties. We also lend on ground-up construction and work with first-time and experienced operators. Our loan products are also available for foreign national investors. InstaLend, your preferred partner for an insta-good experience. For more information, visit instalend.com.
So I'm very excited today to have Todd Butwinick as my guest. Todd and I are friends from the furniture industry, actually. That's how we met back in 2007. And then Todd moved to the real estate world. He joined Gavish Real Estate back in 2009, and believe it or not, I bought our first rental properties, investment properties, through Todd. So welcome to the show, Todd.
Thank you so much. Thank you for having me. Pleasure. Happy to be here.
That's great. Todd, tell us a little bit about your story. I know you came to Las Vegas back in the 90s. You were in the furniture industry, and just tell us a little bit about yourself.
Yeah, I basically grew up in the furniture industry. My family had a furniture store for 100 years, so that was my background. I had an opportunity in the early 90s to come out here completely unrelated to furniture, which was uncomfortable for me because, that was our industry. By the way, anybody that's interested in getting into the furniture business, if you want to make a small fortune in the furniture business, all you need to do is start with a large one, and you can you can achieve your goals. So when I came out here, I wanted to get out of the furniture business, but I was 19 years old, and I had an opportunity to come out here, and I asked the guy when, and he said tomorrow. So 19 years old, get in my car, drive out here, and I was selling advertising for a couple of years actually. And one thing I learned very early on was when you're working for a casino in 1990, I'm going back 30 some years, but at that time it was great because who you knew got you in the door.
Correct.
You didn't necessarily need the experience, it was who you know. Unfortunately, I soon found out that when that person gets axed, which they eventually do, and all the people they brought in, they took me with it. So back to school and back to the furniture business, actually, the retail business.
Okay.
And I was working for Sears and going to college at the same time. And they opened up a new store. So I transferred to this new store, and I was going to, make that my career because when I was going to school, I was going to become a banker.
Okay.
So I was working 40 hours a week at, I won't give the name of the bank, but I was working at Bank X for 40 hours a week. And I was selling furniture for, 20 hours a week.
Okay.
Well, the income disparity was, too much to handle. My 20 hours a week would net me $1,500, and my 40 hours a week would net me $400. So I said, I think I need to, go into sales.
Sales was
my,
you were selling furniture.
Yes, so I said, I got to sell furniture. So coincidentally, we opened up the store, and a guy comes over, and he's watching me. And of course, every time he came over, I had tons of customers, and I was closing a big sale. And finally, the guy, who turned out to be my father-in-law eventually, but he said, I got to have you come work for me at my...
That was a new store opening up, or it was just...
No, it was a local store here in Las Vegas, and they have been in business for 60 years. Top 100 store, very successful store. Walker Furniture, we can give it the plug. They're still in business, and fantastic organization. So I went over there to sell, and eventually, after a couple of years, I opened up my own business. And
So how long did you work at Walker?
I was there for about 4 years.
Okay, and that's when you met your wife.
Yes,
correct?
yes.
Okay.
In fact, funny story is my dad tried to set us up before I even met her. He goes, "I got the perfect girl for you." See, always listen to your parents. They always know, they're wise, and. So he knew before I did, but yeah, I met my wife there, and we got married and had children, and at that time the business was expanding. Of course, obviously they got a fantastic business, but it's a family business, lots of family members.
Correct.
And I think at some point I realized very early on in my life I have a little bit of a dent in my head, and it's always looking for things that are bigger and better and expanding. And so I thought I better go out and open my own business. But I realized that, in the furniture business, I make the joke about taking a large fortune and turning it into a small one, but David knows, being in that industry, it's a tough industry.
It's a very difficult industry. Yeah, it's not easy, and I think a lot of people that we are lucky, in a way, to exit that industry and go to another. But no, I agree with you. But you, at that moment, from what I remember when I met you, you used to have the Norwalk franchise in Las Vegas, correct?
Yeah, so I was searching for businesses. Truth be told, I had a great opportunity to open up a chain of stores in San Diego. And we were very much considering the offer, and my wife and I were in serious consideration and almost ready to pencil the deal. And I go to work at Walker at the time, and in my box is an advertisement for Norwalk Furniture, that they were opening up franchises. So I know that, I think my father-in-law rolled up that little thing and put it in there because, of course, we had a grandson.
Okay.
So, he made me an offer I couldn't refuse. Here's this great opportunity. And with a franchise, you have certain protections, right?
Correct. It's a good model for certain things.
It's a good model, and just statistically, about 92% of franchises are in business after 1 year, and 92% of new businesses are out of business in 1 year.
Yeah.
So there's your dichotomy.
Correct.
And the reality is this lack of business plan. If you have a good business plan, you can implement it. Lack of a business plan probably means a lack of implementation, and you're going to have some.
But you join
demise.
a system, right? You join a network of a system that is already working. So it definitely is, in a way, you're hacking the business, right?
Absolutely, and their goodwill and all of the other things that
Exactly.
take. We find that in real estate, even with Century 21. We were, an independent company for years. In fact, we were the top independent company.
In Las Vegas.
But that, that doesn't buy you much when you're talking real estate, especially in today's world, because it's an international market.
Correct.
And that brand really, brands bring things to you, so that's...
So fast forward, you acquire the franchise for Norwalk, and then you stay with that business up to 2007 when you sell it.
Yeah, so from 97 to 2007, and we started with one store. We had 4 eventually.
Okay.
And we were the top stores in the nation for several years. But that being said, top in sales, we're in Las Vegas. Las Vegas is also a very expensive market to do business.
Yeah.
So, sometimes if I were to get an award, today's award, I want an award on profitability. In my younger years, I only wanted it on sales and volume, but now,
It's about the profit.
It's about the profit.
You keep. So you sell the company, and then you come to the big question of, okay, so what do I do next?
Yeah, what do you do when you grow up? I've never really worked for anybody. I've been in my family business. I did work for Sears and a couple of banks, but that was very restrictive for me. I never really was the type of person that could just sit in an office and,
So you want to unleash the entrepreneur.
Yeah, and again, you got that down, so my wife says to me, you should probably get your real estate license. We had invested for years in homes, and we had some background in that and background in sales. So I said, okay, I'll go down and try to pass my real estate exam. So I went down there and I took the test. I got the books, but I didn't want to study and read the books. I wanted to see if I could just take the test. Do I have enough knowledge to get into this? I took the test, I passed it. Then I've got to say, hey, I got to find a broker, and the broker has to make money, you got to make money. It's just a complicated business, as any business is, really.
Yeah.
So
now you join Gavish Real Estate, and the first year you do 55 transactions.
Yeah, so I joined Gavish Real Estate, and the only reason I joined Gavish Real Estate is really the reason why I'm still there today. It's my partner, Rtos. It's the trust factor.
Correct.
Right? If you trust the people you're with, you're going to succeed.
Yeah.
So
So you joined forces with him?
I joined forces with him, but just, as a salesperson, I just said, and I had a book of business I thought that I could, tap into your sphere of influence. But not knowing what I was doing, I said, I want to, just go on the floor and just say.
And now the timing is very interesting, right? Because if we remember 2007, 2008 is when the crisis and the crash happened, and the biggest recession, the Great Recession. And that's when actually, it was funny because we connected and we acquired our properties through you. And I remember we bought properties at, $50,000, $60,000, right? Yes.
And can you imagine that? We're sitting there negotiating. Well, can you get it down to 54? We're at 56. Oh my God, can you imagine?
It's crazy.
Ridiculous. Yes.
Ridiculous. But so you coming into the real estate market when it's crashing.
Yes.
So what are the challenges at that moment of the climate that you're experiencing in the real estate?
Well, I think for me, I looked at real estate from a 500-year perspective. And I think if we always looked at things from a 100 or 200-year perspective, I think we'd probably have a lot better idea of what's going on.
Yeah.
We try to, even getting ready for this, at some point you're going to ask for some predictions and what's going on. We try to minimize it for, okay, Todd says in November the market, if we could predict it to that point, we wouldn't be here, right? We'd be somewhere else. But there are certain things that are trends in businesses, and certain things happen. And at that time, the market was so low that when you can buy something for less than you can build it for. So you got a house that's replacement value of $75,000, you can buy it for $50,000. It just makes sense to put your money in that and to leverage it.
Correct.
And that's really my business success. I think has been using that leverage.
Okay.
So whether it's taking Century 21 and implementing the franchise system and having now 170 agents that are agents out there to facilitate our business needs, or having 3 people. It's about building that pyramid over and over.
Correct.
And I think if you build that pyramid, long term, you'll be successful.
Okay, now when you join Gavish, it's a completely different climate. You're probably selling most of the properties at that moment to investors.
Some investors, some now again, there was a lot of people I think made a lot of money during that time, but they were institutional buyers and they were buying it on the unemotional factors of real estate. But to me, that's not the 500-year plan. That's a plan that when you have a great recession, which happens once in our history, just like a depression happened once in our history. Now, not to say that we won't have financial crisis or challenges as the future. We're facing many all the time. But when I looked at it, I thought to myself, okay, it's 2007. Imagine if I were to go back, let's say 100 years, and it was 1907, and somebody were to say to me, I'm going to give you the opportunity to open Cadillac. But by the way, over the next 100 years, we're going to have a great recession, 7 world wars, 13 recessions, go through 25 administrations. By the way, do you want to open a business?
Yeah.
Who would say yes?
Correct.
Nobody. But during all of that time, no matter whether there's war, recession, depression, whatever is going on, people need to buy homes.
Correct.
People need to put furniture in them. People need to live their lives.
Correct.
And I think that's an important lesson we've learned over the last couple of years is, living your life is important.
Yeah.
The material things are there, but you have to live your life.
Yeah, 100%. And I would add that, and that's what I believe, that real estate is the best proven asset to invest on, just over time, going back to history.
Yeah, and again, you can take any period of time and make it miserable. If you bought in 2006 and sold in 2009, that was not the best time for real estate.
Correct.
But typically real estate is not a short-term investment, it's more of a long-term investment. And if you bought in 2006 and never sold your house, you're in a nice position today. So statistically, it's still worked out. And I think long-term, as it sits to the market today, it used to be that cash was king. That's not the case anymore. If you have $1 million in the bank, it's worth $900,000 according to the government next year.
With inflation, yep.
And I don't know about you, they say 10% inflation. Have you gone anywhere and seen 10% inflation?
No, it's way more. That's the official rate, right? We all agree that the official rate is not the actual rate.
Yeah.
That's for sure. But no, I agree. And just to add to what you said, real estate over time, the appreciation of that asset, I think, is just a bonus.
Yes.
As an investor, you really want to invest for cash flow. That's really what you want to do. But yeah, I agree with you. Historically, real estate tends to appreciate over
Yes,
time.
and I'm not going to argue with your statement, but I'm going to add a little caveat to your statement. When you're looking at real estate, I think you have to look at it as like a fruit basket, right? And if you had an ideal fruit basket, it wouldn't be filled with 20 apples. It would have an apple, an orange, a banana, a mix of it. So there are some things that are cash flow that are very important, but there's also leveraging a little bit of your equity. And when you have an appreciating market, which, think about that for a minute. Statistically, do you always have an appreciating market? Statistically.
Yes.
Probably, right?
Yeah.
I mean, again, if you look at it as a long-term investment, I say 5 to 10 years, during that period of time, it's going to be a rising investment.
Correct.
So sometimes if you have a certain amount of cash, you can leverage that. Let's say you have $50,000 worth of cash, you're not going to get a 10% return on $50,000 cash. You're not going to put $50,000 in the bank and they're not going to pay you $5,000 a year.
No.
If you negotiate the best deal in the world, you're at 1%.
Correct.
Right?
Correct.
So if you take that $50,000 and you put it on a $450,000 asset that's appreciating at 5 or 7%, you're getting, basically a 50% return on your money.
Correct.
So
Correct.
now if you say, hey, that's my formula, I'm going to take 100% of my cash and leverage it out to everybody else, get ready to go to bankruptcy court, because if anything dips in that market, then you don't have the cash flow to survive those downturns. So, but there's a certain point, I think, when you get to X amount of houses or X amount of investment portfolio, where you got to say, hey, is cash king, or do we take that and leverage it a little bit? Even with our crazy 4 and 5% interest rates, which are still
very low.
Very low.
Yeah.
I think it might be a good proposition.
No, I agree. And I think also that, leveraging right now is probably the best business for you because, take it into consideration. And just let's take the official rate of inflation. Let's say it's 9, 10%. If you're borrowing money at 4 or 5%, even 6%, you're still ahead of the game.
Yes. It's really, when you think about it, they're paying you to take the money.
Take the money.
Yeah.
Exactly.
And
You're destructing your debt in a way with inflation. So, but we are seeing some changes, right? I mean, the challenges or the climate back in 2009, 2010, 2011 has changed completely. Specifically, let's talk about Vegas, which is your market. This is where you are, right?
Yes.
There's a lot of things going on in Las Vegas. It's not only growth, population growth.
exponential.
Exponential job growth, a lot of job creation. Even though coming out of the pandemic, right?
Yes.
I mean, what's your thoughts on that?
Yeah. To me, that's the most astonishing thing that I've seen is the people that are purchasing the homes. We monitor that really carefully to look for trends. So if we go back to 2008 and 9, it was 90% of the people that were buying were investors. It was 10% were homes. Today, it's really only 4 or 5% of the people that are buying are investors, right?
Yeah.
I mean, 95% of our customers are average Americans that are trying to buy a home, and they're relocating to Las Vegas, but they're coming here with real jobs. And the gaming used to be so heavy in our industry, and
it still is, but not as much, right?
Not probably 30-40% reduced from what it was in the 80s or 90s. So now you could argue that building of the casino has those ancillary services. So are they related? You could probably pump that number up, but when we get to the $2.5-3 million mark of population here, that's a major city. So we see a lot of that change. Where in 2006 and 2007. The investors were buying, which they had no emotional attachment to the home.
Correct.
That's number one. And they could leverage almost 100%. So there was no incentive for them. But now the investors that are buying are putting 25 to 40%, and in most cases paying cash. So if you pay cash for an asset, it's not going to go back to the bank. It's not going to go into foreclosure. I don't think the banks have the appetite for that. If they could relive that over again, they would say, hey, they'd be better off working out payment arrangements with the owners than they would be, liquidating the homes.
Now, I'm sure you monitor different statistics in the Las Vegas metro area. What are you seeing in terms of foreclosure, right? Because when the pandemic started, there was a lot of talk about when the forbearance ends, we're going to see a spike in foreclosures and all that.
Yes.
What are you seeing in Las Vegas market?
We're seeing a spike in notices.
Okay.
Okay. So
do you think is that because of the forbearances?
That's because some of them have ended, yeah,
Okay.
sure. But that doesn't mean that they're actually in foreclosure.
Correct, it's just notice.
The bank wants to protect their interest, right? So in doing that, they have to give the notice. But
you haven't seen an increase in foreclosures itself.
we haven't.
You have.
We have not.
Okay.
No.
Now,
But if you just look at macroeconomics, right, it's supply and demand.
correct.
So right now we have a few thousand people moving in here every month, and they're not building a few thousand homes. So, and that's the microcosm that's happening in Las Vegas. But being part of Century 21, we share that data with everybody.
Correct.
So we can see also nationwide what's happening, and it just isn't a microcosm of Las Vegas.
Is overall.
The people that did not buy from 2007 to 2013 because we were in the Great Recession, those people are now entering the market. The problem is Generation Z, which is the next generation, which is the biggest generation since the baby boom, are now entering the housing market. So you have those two forces coming together. The National Association of Realtors gave us a statistic that if all the home builders in the United States went on a 24-hour, 7-day-a-week marathon, which they're not, by the way, it would take 9 years and like 8 months to build the amount of homes that are needed in the United States.
Yeah.
So when you look
That's
at
crazy.
That's crazy.
That's crazy.
That's insanity.
Yeah. And it actually correlates so good with an article I read from a research company, Rtos Research. I'm sure you know them. In order to have and that's what they say, to have a balanced market, we need about 1.5 million homes available.
Yes.
Listed on the market.
Yes.
And I think we're like around 300,000 right now.
We are.
overall.
And so in the microcosm, you look at Las Vegas, 3 million people. You're moving to Las Vegas. You should have a selection of between 16 and 18,000 homes. That would be a normal market.
Yeah.
Right now, I think I checked this morning, 2,900.
2,900.
Yeah.
Okay.
But I mean that's
we need 10x.
Yes,
to have the balanced market.
Yes. So it creates that situation where you have some of that appreciation, and now we're at or kind of above replacement costs. So that becomes a speculative market as opposed to you're buying just an asset that's worth a certain amount of money. Now, can you speculate on real estate? Of course, I think everybody speculates on real estate. It's not, that's not an evil word, but there is higher risks in that. But what's the alternative? If you have that investment and you need to liquidate it, you have 9 years and 10 months of awaiting,
It's crazy. It's crazy. And then the other thing also, which I think is very interesting as well, is that existing home buyers, they're going to hang on to the deal of the century, which is they probably refinance their property at 2.9%, and now rates have gone up.
Yes.
So they're probably refinanced and renovated their house, whatever they did. So they're not going to let go of those properties. So probably we're going to see less people willing to sell. And added to the construction issue, to the development issue, right?
The development issue isn't going to be solved over time.
No.
I mean, that's a decade problem
Correct.
that will, and the thing is, during that decade problem, we're probably going to have 2 recessions during that time. Mm-hmm. And the thing about speculation, it's just like oil prices. It's like oil prices are not up today because our supply is down. The speculation of where supply will be has caused a fear in the market, and that's caused disruptions in the pricing. The supply hasn't been disrupted yet, but it's the reaction to that can cause the problem.
Or political instabilities like the war and whatever.
Yeah, but what's going to happen during that 10-year period, my point is there's going to be a couple of those disruptors where they're going to, instead of going to a 7-day shift, they're going to go to a 4-day shift. And, so that's not a bad problem to have. I mean, David, when you were in the furniture business, when I was in the furniture business, we had retail and then we had our plant. If I had if I had 9 years and 11 months of guaranteed orders coming in, we'd still be in the furniture business, right?
For sure.
I mean,
and so people understand, our listeners understand the severity of this supply issue. It's like really going to the store and looking at the shelves empty.
Yes.
Just with a few products on the shelves, and that's really the problem, right? Into the real estate, and like you said, it's not only happening in Vegas; it's across different markets in the U.S. No, so that's the big question. Now, what's going to happen? I mean, what's your probability prediction based on supply and demand to the pricing? I mean, are we going to continue seeing appreciation and double digits as we've seen last year.
I
in
think
Las
for
Vegas?
this year, probably we'll still finish that out. And I think as rates go up, that will curb some of the inflation in the pricing.
Okay.
It's how that's billed, you know. I mean, I'm a little cynical when I look at the press and things like that, because they'll say, you know, we're in a recession and a downturn in the housing market because we've gone from 20% appreciation to 10. And it's just like, you know, come on, be realistic. If you're in the 4 and 5%, you know, appreciation, which is a normalized market, is that a down market? They're going to say yes, because we're used to getting that, you know, 10 or 20% return. But that's unrealistic.
Correct.
Long term. And that's one of the reasons that they're doing that to interest rates. The interesting thing is, if you look historically, when interest rates go up, so do housing sales. And like we were discussing off camera earlier, you know, even borrowing money, you know, if you're borrowing at 9%, you know, if we have 9% inflation and you're buying at 4 and 5%, it's still a negative return on your money, right? Or positive, you know, 2 negatives.
Correct.
But it makes sense to do that.
So now, based on what we just discussed and the supply issue, so this year we will continue to see in Las Vegas market appreciation.
Yes.
We still have obviously the supply issue. I was talking to a developer.
And more importantly than that, though, David, we have the demand issue.
The demand.
So
we have a couple thousand people moving every month.
Yeah,
like
right? 5,000.
Like 5,000. I was talking to one of the executives of one of the big builders here in town. He was telling me, you know, they're planning to build about 1,500 homes this year, but probably they're having so much issues on the supply chain and with the staffing and labor that he doesn't even know. I mean, he has a waiting list and he can't even supply those, right? Yeah. So if we are, you know, once again, if we build 10,000 homes in Las Vegas this year.
Yeah, that would be like me going like this.
Exactly. I mean, exactly. There's nothing now. And the demand, based on what you're seeing, the demand is not going to stop.
Well, I don't think the demand is going to stop nationwide, because our country is growing, and that's the bottom line. It's the growth is creating that. In Las Vegas specifically, we have got a couple of unique things, is where we have California. And California can be our best friend and our worst enemy, but depending on what's going on in California, it does fuel the growth of Las Vegas. And I don't see California necessarily getting their economic situation in order, which is causing a lot of people to leave Southern California, which is a lot of growth that we get here in Las Vegas. To boot, you've had the same housing issue that we have nationwide happen there. So you have people that are coming even from depressed areas that are getting several $100,000 more for their home. They can come here, have a good life, you know, pay the home, have some money in the bank, and now even COVID has changed where people are working. Doesn't matter in many cases where you work. You know, if we could have done this remotely, or you know, I myself like to be in person with people. I think that in-person contact makes it so much better.
Now talking about the Vegas market once again. So we have a great demand.
Yes.
Now, what are all the issues that is going to come with that, right? Because we have so many people coming to Las Vegas. So we have the supply issue for given housing.
Yes.
What about the opportunities that opens up for development, multifamily?
That's kind of what we're focusing.
Housing.
Yeah, we're working on we're like, hey, our business could double. When we look at our franchise business, if we double the amount of listings, I think our business would double overnight. So our our disruption in our chain is our inventory. So what we've done now is we're looking and exploring at a few different development opportunities to invent that inventory. And a couple of the projects that we're working on are multifamily units.
Correct.
And that's where, and our design is where there really will be owner-operated multi-units.
Correct.
So that somebody could go in and buy that one unit and rent out the other two and stabilize their mortgage payment. And really it's about building wealth and
Correct.
getting those people into the housing
Correct.
industry.
That would be a smaller multifamily, fourplex,
Yes, three and fourplex.
Three and fourplex.
Mhm.
Okay.
Where you could almost manage the mortgage on your own.
Correct.
But those other, and again, that's creating that wealth. And I think for people that, don't own a home right now, they're looking at it from the emotional standpoint.
Correct.
And you buy a home for two reasons: emotional, or you buy it for monetary. Now, even when you buy it for emotional purposes, you can have that monetary benefit. Mm-hmm. But again, if you have a couple of those things in your fruit basket to leverage your net worth and your ability to create wealth, I think that's it's a recommended package. Don't get caught up in the emotion of saying, well, it's got to be the right house with this color drape and this color driveway, because, in an appreciating market, you're going to miss the boat at some point.
Correct. And
don't you wish you would have bought 20 of those homes instead of 4 or 5?
I try not to go back to what I didn't do, right?
Agreed.
I just, that's what I did, and I just move forward, But yeah, for sure, I hope that we'll be given another opportunity like that.
Sure.
We might.
And I was making reference to that, David, just because of the price,
oh,
right?
Yeah.
But
and I talk to my wife all the time.
Yeah.
Why we didn't buy? The timing is also always right. I mean,
yes.
We didn't have it
because you had a furniture business that you were
remember
subsidizing.
That cash was king at that point, right?
Yes.
So it was hard to leverage to purchase property back then.
They made it almost impossible to do that.
Almost impossible, and properties were selling so fast because investors
had
from
cash.
all over the place was coming.
Yep.
Yeah, so
but even if you would have paid, let's take one of the first homes that you bought, which I think was $50,000 or $60,000. But even if you would have paid $150,000 for it,
I know.
it still would have paid a great return and dividend, and you would have made a profit on it. So it's like.
I remember looking at properties after we bought those first few properties at 50, 60, 70, I think was the highest one, that you were sending me over 100 already, 110, 105. I wasn't even looking at those because I was like, no, these are too expensive, right?
Yes.
I remember doing my obviously cash on cash flow analysis, and if it didn't make sense, I wasn't buying. But once again, I mean, we can go over that and say we should have or we should not, but
What did we learn from that?
Oh, 100%. 100%. Now, going back to what you said for our listeners or people that want to get into the real estate investing, one way, and you touched on that, on buying a multi-family, like a duplex or a fourplex.
Yes.
And that's kind of like a house hacking deal. So you buy the fourplex, let's say, you live in one of the units and you lease the other 3, and the other 3 are paying for your mortgage. And you might even have a little bit of extra cash flow on it. So that's a great way of getting into the real estate business. So I think that's
and further to that, I think if you're getting into the business, have a great advisor, and that's where a qualified real estate agent, an accountant, and an attorney, always having that bucket of those 3 people, and just listen to what they say, because it's always those little things, those little insights, and that little guidance. In that perfect scenario, like we just imagined there, you get this person in and they have no mortgage payment. What does the average person do that's new into investing when they have no mortgage payment? Spend money. And if you put that money away and have a plan to put that money away, that one property becomes 2, becomes 3, becomes 4, and that's when it starts multiplying.
Correct.
And it gives you the options to say, hey, do I want to exit my business? Right? Do I want to do a new career? It's all about building that wealth with that cash flow.
And the freedom you get out of it.
Yes.
To do whatever you want.
Sometimes freedom,
we can talk about that.
Freedom to change a toilet flapper at 2 a.m. And just the other day we were closing on a home and they wouldn't record unless the garbage got cleaned out in the front. Somebody had put garbage in the front of the house. So even in the glorious times and whatever, we're all
we got to do it.
We got to do what we got to do and haul it away.
Now, what do you see in Las Vegas right now as opportunities to pick up properties based on the low supply that we have for people that like to do renovation projects, right? Buy the property, fix it up, and renovate it, and then put it back on the market and sell it with obviously a profit. What is going on that market right now?
Right now, it's a pretty saturated market because you've got really 2 or 3 people competing for that business. You've got what I call pseudo investor, which is a guy that thinks he's an investor and going out and soliciting it. Then you have a couple of local franchises that have, wholesalers that are out there for the wholesale market.
Yeah.
And then, of course, you have the retail market, which would be more like, the MLS.
Correct.
So you've got really 3 people that are competing on that. And the leverage of the deal that you get is going to determine how many layers of people that you're paying.
Correct.
That's number 1. But I measure those things as opportunity costs. So don't be afraid of those deals because, if you bring me a deal and you're making $5,000 on it, I would have loved to have found that deal and got it for $5,000 less. But would I have that deal without you?
No.
And the answer is no. So you got to look at those things. But I think it's key to have a great agent because right now the deals that can be found that are off-market deals are off-market. So maybe somebody's listing their house, maybe they're buying it, and you have just that little bit of time right before you put it on the ML. If you're teamed up with a good agent that has a network of people around them, sometimes that property is floated beforehand.
Before it gets to the MLS.
Yeah, just like the second, literally.
Pocket listings.
It's a pocket listing, yeah, exactly.
Okay. Now, you mentioned wholesalers. What do you think about wholesalers? Because I've spoke with the different real estate agents. They have different positions about it. I've heard that there's some regulation coming maybe for wholesalers. So what's your opinion on?
Well, wholesalers, in my opinion, are no different than any other portion of the business. Whether it's a title officer, a lender, a real estate agent, a company, you can have a different experience with different ones, and that's why the person is also the most important. So if you're dealing with an ethical one, great. The problem with that business is there's so much room for negotiation that all parties are not known. And when we represent a client and they have a buyer and a seller, everybody knows what the offer price is. We give the offer and then we negotiate that deal out. The problem with the wholesaler is that part of the equation is taken out. So they'll secure a home for $100,000, let's say, put it on the wholesale market for $150,000. That's not the end buyer saying they want $150,000, that's the wholesaler. And they're negotiating back and forth. So my issues are, A, is it really worth it for the person that's selling the home? Are they their best interest at heart? Maybe they had that conversation and they decided, so that's okay. But there's profit and then there's an egregious profit. And when they put the price up here and nobody takes it, then they lower the price down here and then they lower down here. And I have a price that I can pay for a home if we're doing, we call them refreshes. But if we're doing a refresh, there's a certain amount that I have to pay, and there's a certain amount of money that we need to make, because the bottom line is we are a for-profit business.
Correct.
And there's nothing wrong with that.
Nothing wrong with it, yeah.
So, and I don't have a problem with a wholesaler making a profit.
An assignment fee,
And I encourage it, but I think there's sometimes when a wholesaler calls me and says, you can buy this house for $900,000, and they call me a week later and say, hey, you can buy it for $810,000. Come on.
Yeah, some wholesalers have, and I've seen, because we purchase homes from wholesalers, and like you said, it goes back to who you're dealing with. Sure. There's people that are trying to make a wholesale fee of $70,000, $80,000, and then you're not leaving any meat on the bone for the investor.
Yes.
And then it's very hard to build a book of business like that, right? Yes. If you're making $10,000, $12,000 an assignment fee, and you're leaving enough money for that refresher to come in, buy the property, renovate, and resell it. Yes. Then you build your book of business. So I agree with you. Do you think regulation will come for wholesalers?
Probably, but that will bring always the unintended consequences of legislation that will probably harm us in the long run on some other way. So that's my problem with that. It's like there's always good intentions with legislation, and but there's always unintended consequences that they don't think. I think when you look at wholesalers, just like you look at Open Door and all these other.
That's great you bring that. I was going to ask you, what do you think about all these e-buyers?
Well, we call them ants at the picnic,
okay.
Right? And every picnic that you're going to have, there's going to be ants there. But I think it's relative that they're ants, right? It's 4 or 5% of our business, and that's the problem with legislation. Typically, when you look at any legislation, whether it's real estate, a social issue, any issue, the major legislation is decided on 4 or 5% of the population. They never look at 95% of the people, 95% of the wholesalers that are good, 95 that, they always focus on the 2 or 3% that are causing the problem, and they want to change the whole system for that. Look at Frank Dodd and all the legislation that came out of the Great Recession. Certainly good intended legislation, I think, to a large degree, but you look at some of the unintended consequences, push people out of the market. Yeah. Because it was at one point if you had a pulse, you got approved for a home. Now you need to, show
X-rays.
why you were, X-rays and, why were you late on your Sears account in 1992? Come on.
It's funny that you said that. I heard from a loan officer, actually, very knowledgeable, and he was telling me, David, the mortgage industry became the second highest regulated industry, right after healthcare.
Yeah.
It's amazing. I mean, I agree with you. I mean, I think obviously there was mistakes done in 08 or 09, way.
100%.
But yeah, I mean, it's just a lot of people that don't qualify, which have opened another market, which is the Rtos.
Yes.
Lease to own,
Yes.
or rent to own.
Yes.
I mean, what are you seeing here on RTOs?
We're seeing that as a big segment of the business, and it's a growing segment. I would still say it's probably ants at the table because it's a very small percent, maybe 4 or 5% at most of the market.
Okay.
But what we're seeing right now is the starter homes are at a price point where you really can't afford to purchase it, but you could probably afford to make the payment on it. So these companies are coming in, they're purchasing the home, they give a long-term lease with a purchase option. And again, is it a fair deal? I think it's an opportunity to get you into that housing market. Is it the right deal for you? I think it really depends on having that great agent along with an attorney and an accountant. Because I think there's many opportunities out there other than that you could go into. You just need to explore all your options. Okay. Is it a terrible option? I don't think it's a terrible option. Are you paying a premium?
Yeah,
you are. But if you have bad credit and you need a car and they'll finance it for 15% instead of 8% or 2%.
Correct. And this is for people that don't have access to credit. Yes. This option.
But there's a path with it if you do with the right organization, which we partnered.
Eventually you can access traditional lending.
Yes. Now, like we have our agents, we train them when somebody is on that program. Once they purchase the home or they move into the home, that's where our job starts, because we need to work with that person to get them on a schedule so that they can be in a position to purchase that home when that lease is up.
Okay.
Now, if you're just going on odds, there's a certain percentage of people that will not do the steps necessary to purchase that home, and then they'll let that go away.
And then they lose the premium.
And then they lose the premium. So they've been paying this premium this whole time, and then they don't exercise on it.
Correct.
Now, are the companies doing that? Are they big, bad, evil companies? Of course not. They're laying it all out on there. But I think when it comes to real estate or investing, it's just like anything that you want to be skilled at. If you want to be a great golfer, you need a coach. And sometimes the coach needs to give you tough love and say, do this and do that. And these are wonderful people that just need an opportunity and a little financial guidance, and they'll end up owning that home. Mm-hmm. And in that instance, I love it.
Yeah, and we encourage people to always build a team around real estate investment. I mean, it's definitely a team sport. What do you think about as an investor, right? If I'm an investor and I approach your firm, I'm like, I want to invest in Las Vegas. I know it's a growing market. I know there's a lot of, potential for growth.
Sure.
What would be the asset class? What would be the strategy that you would recommend? Maybe short-term rentals? I mean,
Sure. Well, it depends. Again, that's a pretty broad question. Correct. So I would say, hey, if you have capital, which there's a ton of capital out there right now. Mm-hmm. That's our problem right now. We have more capital than we have assets. That's why we're creating assets so that we can put them into it. But I would say the first thing is you need to meet and decide where your investment strategy will lie. Is it in Class A, Class B, Class
Correct.
C? And again, you start building that. If you have nothing, single-family residential is always a great way to start because there's a lower barrier of entry, capital-wise, and you can start to build. And I would say start with the end in mind. Don't start with today in mind, that is there an opportunity today or not an opportunity. Say where you want to end. I want to own this property for 10 years. I want to own this property for 5 years. Whatever your decision is, then you're going to plan your strategy accordingly. If you try to do it just for that short-term gain and that hitting that winning number, I think real estate, like anything else, that's a gamble.
Yeah.
And
you're speculating.
You're speculating, and I just, not that if you're buying a distressed property and then you're fixing it up, that's a completely different category.
Yeah, that becomes a business.
That's a business.
An investment. Yeah,
that's an investment business.
Buying low, selling high.
Yes, yes. But to get all those things done, the network of people that you need to get that done, it's not a simple formula. Buy a distressed property, fix it up, and then sell it for profit. If it were that easy,
it sounds very easy.
Yeah, everybody would do it. It's not that easy.
It's not that easy. Yeah, you got to have all the systems in place in order to
Sure.
scale.
What we're seeing as a trend, though, is we're seeing some of the investors, the long-term investors, are taking the profits that they've made over the last 4 or 5 years, and they're upgrading their asset class. And that's the biggest thing that we're helping people with right now. So they're moving from homes that were built in the 90s, maybe to a brand new home.
Okay.
Something like that, just taking that, because we go off the Warren Buffett philosophy, and that is you will never go broke making a profit. So when you sell the home, even though you might have some tax consequences, or maybe we could separate that and put it into an exchange or something like that, sometimes you're taking that old asset and just upgrading it to a new one.
Okay.
The more that happens, that'll allow other people to build or buy that other asset class.
Okay.
When that starts to move, which we're seeing that's when we're going to see some activity.
Okay. And then lastly, what are your thoughts on short-term rentals? Have you seen an increase on investors buying properties to fix them and convert them into short-term rentals? When I say short-term rentals, it could be Airbnb, VRBO, or even
health facilities,
health nurses, professionals, executives.
We have a lot of the health professionals. We've got several listings right now that are homes that are operated. But they're not great returns. They're just solid returns.
Okay.
So, but that's not a bad place to put your money.
Okay.
And typically they have 10-year leases, and so you're.
Are those assisted living facilities?
Assisted livings, and some of them are state funded, some of them are not. But it's a good, solid investment with federal funding, so that's a solid investment to put in. We do see an increase. The answer to the question is yes, we do see an increase, but it's always it's like fourplexes. People are always interested in fourplex because when you do the rough math, the return on investment is always high, right? But what you don't see in the fourplexes is that clientele tends to vacate once or twice a year. So if you had a long-term tenant in there, that ROI would happen. But what happens in reality is if you turn the tenant over twice a year, which is common in a fourplex, you have several months that are unoccupied, and that's a vacancy rate. So it ruins your. With VRBO or the Airbnb, any of those, people look at how much money they take in, but it is a business.
Yeah. 100%.
Have we seen successful people do it? Absolutely, but there is a business. If it's not something you can do on the side.
No, it's sold that is easy money, cash flow quick, and it is not. We've owned some Airbnbs, and it's intense work, management. You definitely need to have a property management, which they usually charge a lot more.
Because you're basically running a hotel.
Exactly.
Yeah.
And it depends. Occupancy can be from 50 to 60% throughout the month.
Yes.
So I think personally on the vacation rental, I believe that the most cash flow probably will come from the luxury market, where you can charge a lot more.
Yes.
Not on the $200, $300 a night.
Sure.
I think more on the $1,000.
We're in the process of refreshing a $3 million home right now, and we've had some people that were looking at it to do an Airbnb.
Yeah.
So, but again, it's a business.
It's a business. Yeah. Well, that's great, Todd. I mean, great information shared. I really appreciate you coming and sharing your information. I always like to leave the next invitation open to do a follow-up, so we'll definitely have you again. We'll invite you to share.
Anytime.
Let's see what happens next in the market, and then obviously we'll be discussing that. But thanks again.
The market will be here, I can guarantee you that.
Thank you, Todd.
Sir. Appreciate
it was awesome,
it.
man.